Assalamu alaikum. Gold prices have been going through the roof as of late as people panic about the state of the economy, financial markets, and inflation. So in this video, I'm going to go over the different ways to gain exposure to the price of gold and comment on the halalness. What I can say confidently is that gold is a better store of wealth than cash is. Essentially, at this point, cash is trash. Central banks have been flooding the market with cash like there's no tomorrow. And this is eventually going to bite us in the behinds at some point. I mean, cash is good if you want to pay your bills, but as a store of wealth, I wouldn't bet on it. Right now, we're seeing inflation in the form of asset price inflation, so stocks and commodities seem to only be able to go up. However, I do think that we may start to see this inflation appear in much more painful ways, specifically in the form of the depreciation, the accelerated depreciation, I should say, of the fiat currencies that we use. If you're looking to lower the risk of your portfolio with an uncorrelated asset and you earn more than $200,000 annually, looking to own gold as a store of wealth, here are the different ways that you can do so. The first way, and the most obvious one, is to actually physically own a gold bar or a gold coin or gold jewelry. Some considerations that you want to make when you're buying gold is that you want to make sure that you're buying from a reputable dealer, so don't buy it from someone wearing a fedora in the middle of Times Square that can also sell you a genuine Gucci bag at 10% of its real cost. And also, after you buy, make sure that you have a secure way to store the gold. A security deposit box in a bank is a good option. If you live in an area where perhaps you don't have access to a bank that offers this service, then owning a safe where you can store your gold in is probably a good idea. Now, if you're looking to buy gold jewelry, one consideration that you have to keep in mind is how many carats that gold is. 24 carats means that it's pure gold, and typically jewelry is not made out of 24 karat gold because one, it's expensive to do that, and two, pure gold is actually sort of soft, so it scratches easily. The carats refer to how many parts of the metal are actually gold. 24 carats means 24 out of 24 parts are actually gold. 14 karat gold has around half as much gold as 24 karat gold has. So when you're buying, make sure you're not paying 24 karat gold prices and getting a 14 karat gold piece of jewelry. If you're a man, owning gold jewelry may be a good way to score points with your wife, as well as storing your wealth. If you're a lady, owning gold jewelry allows you to wear your wealth, enjoy it, rather than just having it sitting in a safe somewhere, gathering dust and not doing much for you. A drawback of gold jewelry is that when you're buying jewelry, you're not just paying for the gold itself, you're also paying for the workmanship that went into making that particular piece. And if the design of the particular jewelry that you bought goes out of style, that may negatively affect its resale value. Also, selling gold jewelry is a lot less straightforward than selling a gold bar or a gold coin, for example. Now, let's say you don't want to go through the hassle of buying, storing, and then selling actual physical gold, and you would rather have exposure to gold through the stock market. Is there a way to do this in a halal way? Well, yes, there is, and you can do so through physically backed gold ETFs. These ETFs seek to track the spot price of gold, and they do this by physically storing gold bars and coins in vaults on the investor's behalf. So each share of the ETF is worth a proportional share of 1 ounce of gold that the ETF owns. And the price of the ETF will fluctuate based on the price of the gold that it owns. Now, keep in mind, gold ETFs are like any other ETF. They do have an expense ratio. The expense ratio of the ETF bar is 0.18%. And this basically represents what the ETF is going to take from the value of your portfolio annually. And in the case of physically backed gold ETFs, this expense ratio is meant to cover the cost of storing the gold as well as the admin costs of the ETF itself. The advantages of gold-backed ETFs is that you don't have to store the gold yourself, you don't have to buy insurance on it, and when you want to sell your shares, it's as easy as selling a stock. You don't have to put in any effort basically into finding a good buyer for the gold that you want to sell. Now, the third way to gain exposure to the price of gold is through derivatives, most commonly options and futures. Without going into too much detail about how these particular derivatives work, it is my opinion that when these derivatives are not used for any practical needs, so they're not used because you actually intend on taking or delivering the underlying asset. They're purely used to speculate on price without owning the underlying asset. In my opinion, this use of derivatives is haram. It's very hard to differentiate this activity of speculating on price using derivatives from just betting on something random like the weather, for example. I mean, in both cases, you don't own a physical asset. In both cases, you are speculating on something. You're creating financial risk in a zero-sum game. So this makes it very hard to distinguish this activity from pure al-maisir, pure gambling. Allah subhanahu wa ta'ala says in the generous Quran, translated into English obviously, "O you who believe, intoxicants, maisir, sacrificing for idols, and making decisions based on games of chance are filth from the work of Satan. So avoid these things so you may prosper. Satan desires to create enmity and hatred amongst you through intoxicants and gambling, and to stop you from praying and remembering Allah. So will you abstain from these things?" The last method of gaining exposure to the price of gold on our list is to invest in companies that are engaged in the mining, refining, and production of gold. Now, when you go this route, the prices of your shares are going to be less correlated or less tightly correlated with the prices of gold than if you owned gold-backed ETFs or you owned gold coins or gold bars or jewelry. If you're attracted to gold as a store of wealth, I'm not sure why you would own gold mining companies as opposed to just a gold-backed ETF. As for halalness, the halalness of any gold mining company needs to be evaluated on a case-by-case basis. Make sure you're watching out for any highly leveraged gold mining companies, and there are quite a few out there. So there you have it, a review of the various methods of owning gold and the halalness of those various methods. And basically what I've said about gold can be applied to silver and other commodities as well.